happy to answer them as usual. Now let's take a look at the charts.
So let's start with this pair Euro AUD, which was my favorite setup for from last week. Um, it was explained in the last technical Sundays as well. So just to resume for anyone who hasn't seen it, we were forming a nice head and shoulders on an H4 time frame, which we broken down and retested it at the beginning of the week, where I suggested to take the first entries. So I was short at the retest of this neckline here in the yellow rectangle, and fortunately we've broken down more than 200. We've dropping down more than 200 pips, so that was a nice trade from last week. And then what we've did as well, if we look on the longer time frame on a daily level, we've broken down this huge head and shoulders here on a weekly time frame neckline. So if you can see this line here, we're talking about this neckline of this huge weekly head and shoulders. So we've broken down in a one daily in a nice daily candle, and then we've retested it here and creating at the same time um, this supply and demand zone, this key level zone here, which has been confirmed in the past as well, from a lot of those wicks and rejection from the 1.61 200 zone. So my prediction for this week is that we will drop further down from this point, but it is most likely that we will retest maybe a second time this supply zone here, and in the same time the neckline of the weekly head and shoulders. So because it is a huge key level zone that I see here, I'm expecting that maybe we will build a structure around those zones here, and then only to drop further down, and maybe hopefully, if you look on the daily time frame, hopefully we will reach the bottom of this uptrend channel. All right. So the bottom here will be maybe at around 1.59, 1.59500. But it's a swing trade that will take times, and I am expecting to form a nice structure around those zones here before dropping further down. And also this week we had a lot of U.S.-China trade war talks, and it is most likely that there's going to be some updates around this U.S.-China trade war. So as we know, the AUD is mostly affected by China because Australia is China is the first client of Australia. If we talk in terms of export and import, so every time there's a bad news affecting China through this U.S.-China trade war, Australia is following in the background, and it's going. It's a bad thing for Australia, and as well vice versa. When there's good news affecting China, it may be good for Australia as well. So we'll have to look closely at this U.S.-China trade war this week, and that was the analysis on a technical side, but we'll have to look closely at the U.S.-China trade war as well. Now, Euro GPY, which I clearly explained last week that we were forming the end of this fourth wave of this Elliott wave pattern right after we've just broken up this downtrend channel that we were forming from the since the beginning of the year here. So forming this last fourth wave here. So if you know about the Elliott wave pattern, usually the end of the fourth wave will go in confluence with the end of the first wave here, which is exactly what is happening here. So we have this nice supply and demand zone here, nice key level zone, confirming the pass here, here, and right here, right now. So this is really like on a daily time frame. On a H4 time frame, last week was more kind of a consolidation. So we didn't have some huge moves from this pair. So it was quiet. We were quietly descending and testing this demand zone here, this key level zone, which is around the psychological zone 120 0. So basically, what I see for this pair for this week is only a completion of testing this the supply zone, the top of the, the top of the first wave here. So that zone and bounce back up to form this this fifth wave here. And I see two ways that this wave could be formed. So either we go reach the 50% level here, which goes in confluence with the 200 MAs on a daily time frame, or either we broke up this 200 MA and we go all the way up until the 618 on a weekly time frame here, which is a huge zone as well if you look in the past. So this yellow rectangle here, which is as well exactly the 123 psychological level. So we could either go all the way up until the 50% or the 618, depending on how the fundamental goes for the yen. And after that, as I said, after the end of this fifth wave, I am expecting for this pair to drop further down and continue this weekly downtrend. Not channel, but only this downtrend. So whatever. And okay, so it will be interesting to see this week. I'm going to update as well in the Telegram what I see, and with the fundamentals. So as well, the U.S.-China trade war will be exciting to understand what's happening, because it will affect the yen as well.
Now, lastly, I'm gonna talk about USD CAD, which, as explained earlier in the last Technical Sundays, we've broken down this huge uptrend channel, which was forming since 2 years now. So we've broken down this the bottom of the channel. We retested it at the beginning of the week, and now, what happened because of bad Canadian data that came out, we've go a little bit higher than I expected. Now we are sitting down right below the 618 fib and daily 200 MA here, the pink line. So what I am expecting for the beginning of the week is a rejection of this zone, of that 1.32 300 zone, because if you look closely at the H4 time frame, I don't usually look at MACD and RSI, but sometimes I do. And here what we can clearly see is a nice divergence between the last two tops here, and same goes with the MACD and RSI here. So we have a nice divergence. It don't happen often with USD CAD, and when it does, it usually means a reversal. So which makes sense because we close right below the 618 and the 200 MA. So I'm still for this. I'm still down for this target, which I am calling since 2 months now, So first target 1.3200, and eventually I still think that um, the fundamental goes in this way. So eventually we will break down this last low of July and form a new downtrend on a weekly level. So we'll have to look closely at the US-China trade war and the price of oil as well for the Canadian dollar. And so it's going to be interesting to see at the beginning of the week if we reject it, if we reject this zone, the 618 daily zone. Maybe we will form a nice structure around it, maybe a double top, triple top, head and shoulder, with a nice neckline that we will be able to look closely and to find our future entry if you're not already in this trade. So thank you guys for watching. I hope you guys enjoy. Feel free to leave your questions and comments below. And I see you guys next time. So just a quick reminder, all those charts will be posted in the free Vertex FX Telegram, so feel free to subscribe to it. The link is in the description, and I will be updating on those